Good morning, everyone. This is Hadjikyriacos, analyst at IronFX, bringing you the morning comment for the 15th of February. Yellen puts a March hike on the table. The dollar flies again. In her testimony yesterday before the Senate Committee on Banking, Housing and Urban Affairs, Fed Chair Yellen maintained a broadly confident tone with regards to the economy, as well as the prospect of a near-term rate hike. In her prepared remarks, the Fed chief said that a hike will likely be appropriate at one of the upcoming meetings if employment and inflation evolve in line with expectations, and reiterated that waiting too long to tighten would be unwise. As a result, the dollar came under renewed buying interest, possibly as investors priced in a higher probability of a rate increase at the upcoming meetings. Euro USD fell below the support, now turning to resistance barrier of 105.90, to hit support a few pips above the 105.55 territory. The rate subsequently rebounded and currently looks to be headed for a test near the crossroad over the 105.90 zone and a short-term downtrend line taken from the highs of the 2nd of February. The near-term outlook is still negative, and as such, if the bears manage to remain in control near that crossroad and push the pair down again, we could see another test near the 105.55 support. A clear dip below that level could set the stage for further declines towards our next support territory of 105. Despite Yellen's optimistic signals with regards to the prospect of a near-term hike, we maintain the view that for now, the most likely timing for such an action is the June meeting. We believe that the uncertainty surrounding the future direction of fiscal policy, as well as the lack of progress in both wage growth and the core PCE price index, are all factors likely to keep the committee from rushing into the next hike. As for the dollar, although Yellen's signals could keep the currency supported, we think that the broader direction of the currency is likely to be determined by the tax plan that President Trump is set to announce in the coming weeks. The details of the tax cuts that the new administration has promised could determine whether the post-election USD rally will get a second wind, or whether market participants got ahead of themselves and discounted too much too soon. For now, market focus is likely to remain on Yellen, as she is scheduled to testify again today before the House Committee on Financial Services. Considering that she is going to deliver the same exact speech, the market focus will be on the Q&A session afterwards. We would need to see fresh and equally optimistic comments with regards to monetary policy in order for the bulls to add to their USD long positions. A Riksbank meeting, a shift to a more optimistic bias? Today, market participants will probably turn their gaze to Sweden, where the Riksbank will announce its policy decision, followed by a press conference from Governor Ingves. The forecast is for the bank to take the sidelines. The last time the officials met, they extended the duration of their QE program and maintained a rather sanguine tone in the meeting statement, indicating that the outlook for economic activity in Sweden and abroad had improved somewhat. Since then, the nation's CPI and CPIF rates for December, although below target, surged to reach highs last seen in 2011 and 2012 respectively. Bearing this in mind, we see a very low likelihood for the bank to take action at this meeting, and we believe that the statement's language may be even more confident than last time, something that could prove positive for the Swedish krona. As for the rest of today's highlights, during the European Day, UK employment data for December are due out. Both the unemployment rate and the average weekly earnings rates are forecast to have held steady. Although both rates are expected to have remained unchanged, they stand at levels which confirm that the UK economy continues to be unaffected by Brexit uncertainties, at least so far. This may reverse some of the losses the pound suffered after the below consensus CPI data. With regards to the US economic indicators, we get inflation and retail sales data, both for February. Kicking off with the inflation figures, the headline CPI rate is expected to have risen further, while the core rate is forecast to have held steady. Despite a potential rise in the headline rate, the fact that the core rate remains flat suggests that the progress in the headline inflation is mainly due to movements in the prices of volatile items and is thus transitory. Turning to retail sales, the headline rate is expected to have fallen, while the core rate is forecast to have risen. Given the mixed expectations, the reaction in USD may not be major on the news unless we were to see a significant surprise in one of these datasets, particularly in the core CPI and core retail sales. Besides Fed Yellen and Riksbank Governor Ingves, we have one more speaker scheduled for today, Philadelphia Fed President Patrick Harker. For more information, please read the full comment on IronFX.com or download our app and get all the information you need to trade. Also, you can follow us on Twitter, like us on Facebook, subscribe to our YouTube channel, or circle us on Google Plus to get more trading ideas. This is Hadjikyriacos, analyst at IronFX, wishing you solid trading.